Now, it's, of course, January, lots of projections coming from everywhere, coming from IMF, coming from the World Bank. But now, there's another bit of good news, as Nigeria's economy could grow by 5.5% this year, 2026. But that's if government fully implements key fiscal, monetary, and structural reforms. Well, according to a new macroeconomic outlook published by the Nigerian Economic Summit Group, in its macroeconomic projections for Nigeria in 2026, and beyond, the policy group said the outlook is based on an optimal consolidation pathway, which assumes consistent execution of fiscal, monetary, and structural reforms. Well, according to the report, the projections were generated using the NESG macroeconomic model, and which the group said reflects near realistic performance of key economic variables. Using its NESG macro mode, the group also developed a suboptimal scenario, warning that partial execution or abandonment of reforms would weaken economic performance. Under the optimal scenario, NESG expects growth in 2026 to be broader than during the stabilization period between the second quarter of 2023 and the fourth quarter of 2025, when only 4 of Nigeria's 20 major economic sectors recorded growth above 5%. The report said consolidation reforms would ease long-standing structural constraints and support more inclusive sectoral expansion. My guest is Dr. Shakiruddin Taiwo. He's a senior economist with the Nigerian Economic Summit Group. He'll be here to help us unpack details of this report and, of course, analyzing the GDP outlook and, most importantly, sectoral performance. Thank you so much, Dr. Shakiruddin. It's good to have you this new year join these conversations.
Yeah, thank you very much, Telu, for having me on your show. And it's always nice, coming on your platform to always discuss and put more insight, more nuance to the text and the numbers we have in our report.
Indeed, when people see some of those reports and see those figures, they tend not to understand some of the details in it. So let's start with a bit of overview of what we saw in 2025. Just like my introduction said, the shocks that we witnessed in 2023 until 2025 is something that everyone can talk about. We bought fuel at a point at about 1,300 naira, and today we are buying, say, 800 naira, in some cases 7 something. I think it's an increase again yesterday, but at least we see that movement, the volatility and all of it. So in your own understanding and what you've been monitoring, what do you make of where we started from and where we are at the moment?
So in 2025, we are just straight and direct about the message that the gains from the reforms initiated in the second quarter of 2023 is real. A lot of Nigerians confirm that. A lot of our macroeconomic indicators also show this favorable improvement. However, this measured improvement is still fragile. It's not at the state with which Nigeria could say it's hooray, let's go to the field to celebrate. It calls more for intentional, consistent, and dramatic reforms posture as the government took in the second quarter of 2023. So for us, we're sure the reforms gains are real and they are measurable, but it is still fragile. And from what we measure using NESG, Macroeconomic Condition Index, MCI, we saw that from the historical low of 3.0, the index improved to minus 1.7 in 2025. Though we are still within the instability region, but significantly, what we have seen is to say, thank you for the work, but not at the end of the journey yet. The race
not yet to huru.
Not yet to huru.
So there's still a lot of work to be done. But so really you agree, and you say many agree, that we've started to see the positives of the reforms. You know, the argument of the fact that the macros are the one feeling it and the micros are yet to feel it. That is one very important topic that has also been on the front burner, and that's why many are also concerned about the tax laws and the implementation moving forward. So are you saying that we are getting to past that stage that is now trickling down to the micros?
What I would say is we are not at that stage where the total benefit of the reforms has actually trickled down to the micro. You know, there are 3 layers within the economic structure. There is macro, macro, the growth, the inflation, the exchange rate. There is meso level, which is sort of be the middle that speaks to the sectoral performance. What is the agric doing? What's the manufacturer doing? The financial market. What's the response? Then it then gets to the micro level where it affects the pocket of you and I. And so at this level, what we have said, and that's why in the report we actually identify 4 key themes, which we thought if key stakeholders should read through, will be clear about why we said the reform gains are real, but it is still fragile. We're clear. There is this inflationary trend at the moment. This inflationary trend, I have to be clear. It is not de-inflation. This inflationary trend. It means there's a downward trend of the inflation. The rate of acceleration of price increase has significantly reduced. However, there's still huge cost of living that people had to battle with. And I'm not sure how many companies actually increased their worker salary last year. And if you check, the cost of living has increased significantly. I didn't want to put the cost of energy, let's put that aside, which you have alluded to. I want to put the numbers that was released by the National Bureau of Statistics on healthy diet in the country. As at January of 2024, it takes around 858 naira to have an healthy diet. But as of July of 2025, it is 1,611 naira. This is close to over 100% increase. What it cost me to have an healthy meal in 2024 to 2025. And what this means is that though inflation by numbers actually coming down, but the real cost, the micro level, are not feeling it. And we were also clear that the growth, the productivity gains are uneven. We have those some sectors gaining more, which is expected because of the structural nature of Nigeria. But these sectors that are gaining more in terms of productivity are just accounting for 5% of our economy.
Of our economy, outrightly. So a lot of work still needs to be done. Now, we look at the economic stability phase, which is key because we are getting to that point of stability where we now move into inclusive growth. I think that's the way it should be, where we are moving from phases. Now, how would you now, can we explain practically that we've started to feel that stability in that report again, going back to that report again, that stability phase? I talked about PMS, you agreed to me, electricity prices, when we talk about energy, we know what happened with the band A, band B, band C thing, and everybody is still, some say it's a welcome development, some still have their shortcomings about it, reservations. So what do you make about that phase? Are we stepping right? Are we moving? Are the policies following through? IMF also said recently that we must not pull back.
Yeah, so it's actually clear, and the signals are out there. Okay. We see what has happened to our FX. Our FX is stable. And we saw some appreciation you just reported, and we saw means relatively business could plan between 1,000 to 1,500 to 1,400 as the stability rate for their exchange rate. So we saw this, and this is different from the time where there is this volatility. And we also saw the signal, the premium between official market and the parallel market actually reduced significantly. In our report, we measured it to be around 2.5 to 1%, even from the data collected by either the World Bank.
Let me hold your thoughts. I apologize. We need to take a commercial break, and we'll come back and continue this conversation. Don't go away.
Good, tasty food is worth living for. Worried about your oil? Every time you enjoy your favorite meal? Introducing Smart Balance. Smart Balance Rice Bran Oil is rich in Gamma Original. Golden Terra Smart Balance Oil reduces bad cholesterol.
All right, thank you so much for staying with us. We are still having that conversation here around Nigeria's economic projection, and Dr. Shakiruddin Taiwo is a senior economist at the NESG, is with me here to have this conversation. So you were making sense of where we are with regards to the stabilization phase.
So for it is clear, even in theory and in practice, that stabilization has to do with price. And what are the price components that we have? Exchange rate. Nigeria is hugely dependent on imports. So it means exchange rate stability becomes an issue around stabilization. So we'd have achieved some significant stability or predictability in our exchange rate performance. We also saw other issues that affect prices, which is the inflation. By 3 measures that we actually used to measure these prices, we used the input index of the CBN Purchasing Manager Index, the input of Stanbic IBTC Purchasing Manager Index that sort of measure private sector performance, and the cost of business index in NESG Business Confidence Monitor. And from the report, you could see the downward slope of the trend. And a lot of business actually confirmed to the downward trend of cost of doing business in Nigeria, sometimes as a sort of some sense of stability in power supply. And that's why in December, when there was huge issue with disruption of power supply, across these 3 reports that I've mentioned, either the NESG Business Confidence Monitor or the Stanbic IBTC Private Sector PMI or the CBN that measures the whole economy PMI, we saw the uptick in terms of the increase, the rise in the cost of inputs index or the cost of doing business. So this is clear. We'll measure this, but comparing what we had in December to where we were in 2023, I think we are better off. And businesses also attested to this, that we are better off in terms of predictability of the business environment. Then one key thing was clear. The government was intentional about not reversing some of those key reforms. As a result of that, business could bank on some of the outcomes of these reforms. That, I have said, covers from Q3 2023 to Q4 2025. We are not sure of what will happen in 2026.
Oh, obviously, because it's a pre-election year, and many think that lots of economic policies might be pushed to one side, and politicking might take over. But I think it's important that we stay through all of this economic policies, because when we now move to the consolidation phase, I'm still following that report from the NESG now, consolidation phase, which is very critical. For example, we're talking about the implementation of the tax laws at this point. Just earlier today, I saw another town hall meeting attended by Mr. Tawe Yedele and all of that. He's been everywhere since January trying to explain what this really means to Nigerians. So when we get to that consolidation stage, where we now have to start consolidating on the positives on ground, what would you be advising government to do?
Also, we are clear about what government should do for 2026. So what we did in actually developing the consolidation phase and theoretical framework, policy, and some of the philosophical backing is to be clear that we are not out of stabilization issue yet, not totally out. So what we told government as this 2026 should be reinforcing the gains that we have achieved through the reforms. And government must do 4 things. Number 1, macroeconomic anchoring. The price must continue to be stable. Exchange rate must continue to be stable. The second is productivity transformation, especially in 2 sectors we are clear: agricultural sector and manufacturing sector. These 2 sectors must be supported to grow minimally 6%. Our agri grew less than 3% in 2025 in the first 3 quarters. It was worse for manufacturing, it was less than 2%. And when these are there, it means we are going to import more. And when we import more, it's going to affect price stability. And we're clear on the third, strengthening institution, which I think that's what Mr. Tawe Yedele is doing, to ensure that the new NRS has support, their vision is clear. I know policy strengthening that comes from the institution side. The tax reforms were clear will be a major either driver of growth or dragger of growth in terms of the implementation. Because if people are not clear, they tend to be scared, and it affects government revenue, it affects the tax and a lot of things. And we are clear about the fourth. Is social inclusion, which we think was a huge gap in the first phase of this reform implementation. There had to be strengthening of the social investment side. Either it is through the cash transfer, now ensure it is electronic. Transparently, and covers more households at the moment, because it is important. And government should not at any point in time rethink reversing some of these reforms. That is more like a baseline around what we have said. Shouldn't consider it at all. And I think government has given us some sense of assurance that those economic institutions will be affected by politics. The CBN, the Coordinating Ministry of the Economy, which is the finance as well. Yeah. And we are sure trade, industry, and investment will see that these institutions will continue to run on this reform. So if this is achieved 2026, then we then move to core consolidation by 2027 to 2029. So that by 2030, we are moving into acceleration stage. I know you could have that feelings of when Nigeria had a GDP growth of 11.7 in second quarter of 2011. The growth period of 8-9% that Nigeria was among the top leading economies. I'm thinking by 2030, we are looking at we having Nigeria back on G20. Nigeria shouldn't be invited. We should be a member. But all these are on if government sticks to its promise of reforms, support this reform process, consolidate on its gains. We know during the process there might be some gaps. Quickly strengthen these gaps, close up the gaps, communicate clearly, strengthen the institutions. And I think by 2030, I think we can come back, maybe sit here and say, I think we have done it.
You know that argument of growth that compared to population growth, GDP growth and all of that, that as the country continues to grow below that rate, more people continue to fall into poverty line. So if we are growing at, say, 10%, 11%, I'm imagining how positive the economy, the outlook and everything would be if that happens. But on that note, let's move a step further and now look at projections for 2026. Particularly growth projections. NESG is saying if things work out well, we could do 5.5%. Some have said, no, we can't do anything more than 4%, 4.5%. So the argument is back and forth. Even the IMF revised growth rates for sub-Saharan Africa, and we've seen all of this playing out across the board. So tell me, what are your projections and what are the fundamentals around it?
So for us at the NESG, we are clear that instead of just throwing numbers out.
Yeah, it's important because we're going to take note.
So instead of just doing that, so what we have done is to ensure that there is a lot of narrative, there's a lot of insight, there are key factors to drive that number. So instead of just having a number, so what we did is that if government follow through with this consolidation, what I've mentioned, those 4 key pillars, if government follow through with it, Nigeria should be able to achieve 5.5 because by that time, we will have controlled inflation significantly to 16% in our projection. Average now. And from our 2024 macro, we said if inflation is below 11%, at that level, inflation will be supporting growth. So if there's this benefits then from exchange rate stability as well.
Yeah.
2. Then the structural transformation we spoke about, because in analyzing what are the drivers of this, we are clear about which sector we just said agreed how to perform optimally above 5%. So it means our food security issue have been significantly addressed. Yeah. And if government is to do that, it's going to take care of some other issues that are not economy, security. Okay, so we are clear. So we are saying non-oil should grow. We have seen the sort of increase.
NEPC came up with the report, yes.
So we want this to grow. And in the NEPC report, it was clear. What are those drivers? It was 3 major cocoa.
I think urea
from fertilizer. It was clear that the non-oil, so we were clear about increasing local refining capacity of Nigeria. And that will also support price. That either it is EU supporting Dangote with its supply feeds, we are not clear, or ensuring that even if it is one of the 3 refineries that we have is working, or 2, ensure that we reduce imports, which is the biggest demand on our FX.
On our
It's the biggest. So we're able to do that. So what we are saying is that local refining, and if that happens, manufacturing sector grows. And if it does that, what you are doing is you are strengthening manufacturing sector growth at above 5%. at service sector, now you will see the Minister for Digital Economy speaking more about the fiber, and you know, the more you have access to broadband, quality broadband, it improves. And I know what we are also doing also relies on that kind of technology as well.
We're talking about AI now, so how do you want to do it?
Artificial intelligence as well. How do you want to do that? How do you want to drive productivity? We could see this would then increase investors' confidence. Instead of relying on FPI inflow only, you have the needed FDI. I tell people FDI has some key drivers of it. It's not like, oh, we are, no, not only inflation. No, you don't wake up to see FDI. Not stability in FX FDI. Some set of what are the key opportunities in the economy. What is the clarity of government about this sector that this opportunity? So we are clear about those sectors that will drive this growth that we have projected. That's, so instead of government looking at the numbers alone, they should look at our sub-narrative that says you have to strengthen our Greek, ensure increase in domestic refinery, ensure manufacturing sector comes out of its poor growth, support either with fund support, just support that sector to grow very well. Ensure ICT is not affected by any of these dynamics that we have. Ensure the financial service sector is also not affected. The banking consolidation pulls through. We have stronger banks that could support the private sector. I think if we have this in 2026, Nigeria will be able to grow 5.5. There's a document of the government on accelerating growth and poverty reduction. It says if Nigeria could grow 6%, that is the growth that translates to poverty reduction for the country. 6 above 6%. So we say 5.5%. So if we could do 5.5%, we are saying Nigerians will then recount. I want to give this feeling. I think I was out of the post-secondary school education when Yaradua reduced the price of fuel. I said that is a translation of growth. It reduced the price of fuel, I think, from 65. I said that is the when you say translation of growth to the micro level, that is the implication of that. So we are saying might not come from that kind of scenario, but a scenario where that man on the street is able to say, of course, my income will earn me more.
Do you get? Can take me home.
Can take me home. Can ensure I'm able to enjoy. For those that are fun lovers,
yes,
can also enjoy life.
Thank you. It's very important to enjoy life. Well, finally, before I let you go, let's look at the monetary and the fiscal handshake. I think many say it's getting better than what we used to have. I don't know what you're also seeing as we're moving in 2026.
And I think that is clear. And during the speech of the coordinating minister for the economy, during the launch of the macro, he also alluded to this, that this is going to continue. And this actually sort of strengthening investors' confidence in this country. We have moved to an area where the fiscal is going A and the monetary is going B. Now there's this sort of synchronization, and I think the two heads of these agencies or many agencies have actually, at every point in time, give this sort of aligned position and actually work towards it as well, which is what we are saying. And if you could see in the CBN Macroeconomic Outlook report, in their forecasting side, beneath it said, this is a joint consolidation estimate by those agencies we have seen, fiscal and monetary side. This is a clear signal that this is how it should work. When the fiscal wants to spend more to support productivity, the monetary should also support by ensuring that its decisions doesn't reverse the expected outcome of the fiscal side. But I think with what we have, what we would say is, can you please further strengthen this relationship? If this is a commandment from the president, say, the president, can you add to the commandment? This marriage must not see any pathways.
There must be no issues in
no
divorce anywhere.
No divorce.
Dr. Shakiruddin, interesting conversation. I know we can take this for the entire hour, but that's our time. Dr. Shakiruddin Taiwo is a senior economist with the Nigerian Economic Summit Group. They're breaking it down in pieces, helping us unpack all of this report and outlook for 2026. I hope to see you again soon, Doc.
Sure.
Thank you so much for coming in, as always. I appreciate it. Let me get a handshake. Thank you so much.
Thank you.
All right, then we'll take a break, and when we come back, we would now analyze